I want to talk a little bit about my general gut feeling, my general thesis for the next like month, what I kind of could see playing out over the next several weeks. You guys know Josh and I have talked for months and months, really since like late last summer, early fall, about the situation that's unfolding in the market, which is, three, five-fold, whatever it is. There's a lot of components to it. One of the components, retail trading. One of the components, everybody's now work from home. The accessibility behind it, the taboo of trading is kind of out the window. So we've been discussing at length the bubble that we're in. And I think most people realize we're in a bubble. It's pretty easy to make money right now if you're just kind of looking in the right spots because we're in a bubble. And when bubbles take place, it's very euphoric. It's very greed driven. So you see a lot of stuff go up a lot. You see a lot of valuations go through the roof. But at some point, and like we've been emphasizing, like we've been talking about, at some point, there's going to need to be a cool off period, a digestion period, whatever phrase, terminology you want to call it, sideways, channel out. I like the word digest because you have big moves and then you need to digest it. You need to break it down. You need to break it down, condense it, and then on the other side, maybe it goes higher, maybe it goes lower, whatever. But like today, there was a point today where I just kind of it felt like I was working today for the first time in several months. And one of my buddies actually tweeted the exact thing, and I was like, whoa. That's crazy that he's feeling that because I was feeling that today. It was like it felt like work today, like I felt like I had to like super micromanage positions and like I mean the SPY was barely down today. The SPY was down like 0.2% at its low of the day. So it wasn't like we had a sharp pullback today in the broad market or anything like that. I think what's happening though is a lot of the sectors and a lot of the stocks that have been working very easily over the last several months. Like one example would be like PLUG plug, or like the whole fuel cell, hydrogen fuel cell, that whole sector, the green energy sector as a whole, really, you kind of felt that breath today. You felt the breath, you felt the pullback, you felt it. And same with marijuana stocks from last week going into the end of the week last week and the start of this week. You feel the breathing taking place. You feel a collective kind of, oh crap, these stocks are up huge and now you're seeing some profit taking. And what my gut says is that over the next several weeks, maybe even a month, we're going to see some more choppiness with some of those sectors, with some of the quote unquote easier money that's been made over the last several weeks and months. Going to digest, going to take some time, break those charts down a little bit, create some channels, get some narrowing ranges and stuff. But I think for the most part, a lot of those flex breakout type patterns, those are kind of going to take a back seat, I think, for the most part. And that's just my gut. That's just my thesis. That's my gut. That's how I'm approaching the next several weeks. I'm not approaching the next several weeks with the intention of sizing super big into a chart pattern that's, not breaking a key inflection level or, not at a breakout spot, especially like a bounce trade. Like a bounce trade, I'm not taking the same size into that. You know what I mean? So I guess the take-home message really is we're going to have to start being real patient. We're going to have to start being real selective. I know I certainly am. I've been scaling out money from my brokerage. I don't know, for those who follow, I tweeted a picture of my portfolio chart from about a week ago, yeah. And I just let it build the entire year. I just let it build up to dollar figures that I've never let it build up to. And that was really more so just taking advantage of the market. I wanted to have as much money as possible so I could spread my money around as much crap that I wanted to be in as possible. And now that I feel like the broad market is taking that breath and we're going to enter a brief digestion phase, I've been scaling out profits. It feels good too when you scale out money, move it to your bank account, whatever you do. At the end of the day, you don't need millions of dollars in your brokerage account to make money trading. Like that's just something that I've I've always believed in, that I've always preached. Like for a long time, I was just trading in a 30 to $50,000 account range. And whenever I would make 10, 20, 30,000, I would withdraw and I would just go back to that 30 to 50,000 level. Between 30, 40, 50, 60, 70, somewhere in there, less than 100,000, put it that way. For years, for the last like 18 months, I would keep it between like 50 and 60,000. Whenever I'd make a little bit of money, I'd draw it back down and then let it build up, take profits out. But now, especially now that, I feel that the market's giving small signals, not any super strong signals, but there are signals. And when you start breaking down some of these charts, it makes more sense. So yeah, for me, what that means is, yeah, sizing down on my trades, lowering my conviction level a little bit, and withdrawing profits and kind of getting back down toward a comfort level in my account. Because like I said, I don't need millions of dollars in my brokerage account. I just don't, especially during the market that I think is possible over the next month or so. It's just wise. It's just intelligent to take some profits out and just, build your account back up organically. That's my game plan anyway. With all that being said, there's a couple new setups. I want to go over a couple setups that didn't quite materialize today. And then I want to go over a couple new setups that I'm watching. And again, like I'm saying, conviction levels are, for the last couple months, they've been up here. Conviction levels on some of these plays, they're up here. But my conviction level over the last week or so has really slammed on the brakes a bit, and it's really come down. So just keep that in mind. My size is going down, and as my conviction level goes down, my size in these trades is going to also go down. Let's break down some charts. Again, I want to emphasize the take-home message is, as conviction goes down, your position size should also go down, right? When you start having some choppiness in the broad market, position size goes down. Why? Because conviction is going to be going down. As choppiness starts to occur, conviction goes down, size goes down, and stress levels should stay the same, right? Your stress levels shouldn't start going up. And if your stress level is going up, that means that you probably have an over conviction or taking too much size. So that's just the thoughts that I leave you with tonight. Don't forget that kind of stuff. This has been a super easy market to make money in. It's been fun. I'm the first person to wish for it to continue forever. But the realistic side of me just says we need to digest a bit. So watch as those mid to large cap stocks that are within those bubble sectors, watch how they play out over the next several weeks. You guys know what my thesis is. You know what my gut's telling me. So yeah, that's just what I leave you with tonight. I hope everybody has a great day tomorrow. We have